here we are, price action, double top breakout with a 36912 handle in play, burning at 99. We just broke a few ratio highs. As that breaks higher, that price breaks higher. When you're going to get a double top resistance price breakout, MMTs, if this even drops below 95, we're going to get weak right there. And more importantly, here, bing. Let's see if I can get the rest of my market maker lines in now. There it is. Okay, it took a while. Intraday range has to stay at 100 in order to break that top on a breakout. That does. This here is, we made another high and we made a higher price up here. So we went up to 1.48 and now we pull back to 1.45. The top movement MMTs, and this is all for my new market maker enrollees. Those are the market maker enrollees learning to become part of an SMF market maker family, and that's making markets this way. But why do they go higher is you're going to measure that public transaction. Look, we just broke highs and we're breaking out higher here. Now we know why that works, don't we? And there's no emotion in it. And this is still staying, like I said, right there at 99. But more importantly is there's still more room to go. And you're breaking the... So in the system, it's 38 cents a teeny. Each line is a teeny. And so you need to know that. So you just broke out. When we were talking about breaking that top, we broke out 1 teeny. And now we're going into a 2 teeny breakout. That would equal 38 times 2. In that breakout, as we take out those tops right there, this is how they're done. This is how you maintain your emotion. That's working for you there. You've made a series of higher ratios within it, so you know you're pegged to the price. And guess what? We don't use standard technical analysis. Why? We're a market maker between the public. That's different. All this other stuff, that we have it, but we don't use it. But all of that there is how the public does make decisions. So the public is trained in old training models at certain places that some of your newer hedge fund managers today come from that group of people. So they still have that kind of consistency flow about what they do. So that's that group, the institutional tier 1, 2, and 3 traders. Plus, who is in charge? Somebody has to regulate the market. And when they're regulating the market, they're a buyer and the seller all day long. Because of their abilities to control volume counts, which they can do, you will notice when that volume does dry up at any intraday high, whenever this does dry up, right now you let the movement keep going for you and you let these breakouts happen. You're getting 2 teenies on that breakout when it broke that double top. 1 teeny, 2 teenies times 38 pennies. And as long as it stays strong, hey, we just kind of, you know, go with it. Here, we're about to make another ratio high. Let's see if we can get up to... Oh, are we going to see 60 is what we'd like to see there, and you'll break out another teeny right through this live entry. Remember, this is happening now, not after the fact. There are lots of various different things on the internet that teach everything after the fact with speculation. No, this is price action movement right here, right now. Right here and right now, and there's nothing that lies about it. There it is at 369. Let's take a look under the hood here, see what it does. Let's check this half bar, double diamond. We got a double diamond right here. I'm going to hit that button right here. I want to see where all our diamonds are in the trend, called the SMF market maker price points versus the public. So these diamonds help establish how we're going to make the market in there, just as they are on the floor or any exchange. What the warning signs are, what the symptoms are, how you can let these winners go. Look at these double diamonds back to back. Triple double diamonds in the 3, 6, 9, 12 price action breakout at 38 cents a teeny. And if we start to fall weak, at some point every breakout move will have another pullback, just like this has ever since it had its original breakout here. You can see where that consolidation was building its base over here, which, you know, this would have been different, but we're challenging that high. Look, we're up 25 teenies. That's $9.53 in price dollar movement. 25 teenies. 24.8 teenies right now. So as this weakens, that top will weaken. As this weakens, this resistance there at the price action. We got that price action breakout as we're breaking higher up another 2 teenies. Wow, and that IR has been staying strong, and this is breaking higher because this is what you trade. Remember, that's the stock market stuff right here. So what? You're not trading that. That's the market maker bid and ask, and that's a public spread. That's you know, your public tape. And the engagement, you can see the engagement because you can see where people chase that high. And as long as this stays going that direction, no need to sell. This is how you learn how to let your winners run. See? Breaking the ratio high live here, watching that price go up. Here's the price right here. Look at it, keep going higher. But look at the double top breakout. You've got the 369 up to the teeny action line. Right here is the teeny action line. And we're still strong here. And yeah, we pull back a little bit, but now it's going to get weak because if this doesn't bounce back up toward 167, you'll weaken in the price movement. And at some point, it's going to happen. MMTs, the longer that we stay elevated to the 1.67, the stronger that top would be. So you must close above another intraday ratio high. The SMF ratio high must be broke in order to continue the next teeny line up at 38 pennies a teeny. And you have to get on 100 here in order to really accomplish that. And you can see it struggling with the high, but you know that you have to keep making intraday ratio highs. And as long as it does it, you let your winners run. Okay? Because the public is making that transaction, and you were in over here at the double breakout top. This is where we got in, and we got to 36912. Why? Because Netflix is very strong, and more people are going to chase the move. And how do you know? Because that's elevated, and you're making higher highs here. That's why it's a good thing when you join the Market Maker School. It's a year long, and it does have a trading division, and we back all our traders too. Market makers, we back them all. This is what backs you. This is what makes you. And the simple understanding, removing the emotion from the transaction model. And that you're not compulsively making trades like lots of people can do, because that's what the public tape does. And that's the engagement of those people. And you can monitor their engagement right now. It's been quite strong. You will get to a weakening point, and we've had one nice teeny breakout. If you add up the teenies on this top, from where we were doing it. Let's just, because this is it right here. This is that double top. And there's that 3, 6, 9, 12 to the teeny action line. That's the price, everyone. And prices will get weak at some time. They always do, MMTs. So how do we know that? Is we just simply take a look. Remember, we're not staying up toward 100. That's simple. Look at how far we're dropping in here. That's where you verify it. Another way of verifying it is using this half bar at 257.27. It does a calculation for you. You come down to this teeny action line, we're going to see what the public does. Once again, we start to elevate back up toward 100. Bam! They're going to chase it, and we'll break that. We'll break higher. Right now, We got to elevate immediately off support at 158. We got to ascend back into, see, as it's doing it, that's how you're getting some. So the key bar is right here. 257.27, and your bid and ask is 48 pennies by 63. So you know you're above the half bar. And that's why you would come back up. So the public came right back in. Knowing how that you get these little things, look at the contraction of the pullback compared to the expansion breakout of these price action bars. And look at that public keep going with it. But here was the key. It never closed below half of this bar. And as long as it didn't close below it, you wouldn't be selling it. And this is how you let the winners run. This breakout has been for about a 10-minute period or so between the buyers and the sellers. For the new MMT enrollees, this is the kind of training that you can look forward to. Whatever paths that you've been down with other programs or just in general, this program is different. Because this program does not lie to you. We're teaching you how to make a market and then let the public, let the winner. See, the public came right back. Yes, look at the contraction here. You didn't ever close below half of the SMF bar, market maker bar. So all that was a very contracted little drop the bid in the level 2. And that's, I can show you what the level 2 is. On Netflix right now. NFLX. This is a level 2 right here on Netflix. Okay. Then we'll go take a look and see if we can pull the Netflix chart back up. The thing about it is we want you to know one thing. We want you to know that this is a market maker platform. This is not like your standard platform behind here. And like this here, that just provides financial data. This is a market maker buy and sell transaction tape with the public and the public's behavior patterns. And how do you monitor those? Well, we monitor them using this, and we've been making those highs. And we continue the breakout. This particular breakout is for all new SMF MMT enrollees. When you get enrolled, this is what you can look forward to, and this is what you're going to have powered behind you. And you're going to learn how to make markets with the general public. But most importantly, the people behind the scene, what is their role? That's the exchange model. And every exchange model has its own way of doing things. And those are the people who control our buyers and sellers right here. They're called market makers. They're buyers and sellers all day long. What this application does is you don't have to worry about what these boxes mean. Everyone's got some weird science in their mind about this buy and sell tape right here. You could care less. You don't focus on that. You only focus on this. Because if this is doing that and you're staying elevated, you're not going to come down. Here's another pullback. But look at it has to bounce rapidly back up to 1.76, which it's doing. This half bar price, this is the new half bar right here. So that's going to be 257.73, and we're 91 pennies by 16 pennies, or 15 pennies by 16, 1 penny spread. But it's not closing below half of the bar. Once again, just like it didn't close below half of the bar, and we got that much more move out of it. That means that the public is still really liking Netflix right now. And it's telling us. And when it comes down real quick, it pops right back up there, and we keep making these ratio highs, and we let it keep going. At some time, it'll stop, but right now it's not. And the reason why, MMTs, is because you're not closing below half bar. Once you start closing below half bars, that's a different story. That's where weakness is building in the top of the move. And we'll talk about that when we get there. Right now, watch that teeny action line, price action line right here. This teeny price action line. Watch this. If you fall below 95, you have a chance of breaking below half of this bar. you have to close below it, and you have to start a secondary correction bar. That will tell you that people will start to bail out of the trade. That's how you get to short side 369. Well, maybe you get like, okay, so right now he's 1 teeny. He's almost 2 teenies down from the top. Look, 1, 2 times 38 pennies. That's a directional movement. So far, we're going to see live right now. It's a live entry. Is if we regain and stay and consolidate above this half bar, and we're not. So this is the bar I was talking about before it happened, and you're below 95 and you're dropping. This is not spiking back toward 1.76, and that is why this price action is weak. And it's very important in MMT and rollies to understand that, so you can remove the emotional part of the buy and sell transaction, and compulsive buy and sell transactions will not occur. That's what the public model is. A lot of people are saying, well, should I get in up here, or should I sell over here? But we got to come back here. This half bar right here is 257.87. I'm below it. I have to close back above it. And this better stay up toward 100 for that to happen, as you can see here and now. And that better break that high. So we got a 3 top with a start of a little bit of drop in the bid and ask in a level 2, which is all right. Here's the bid and ask. That's a public spread. So let's see what happens and how we're going to gauge that buyer and that seller. This is weak at 1.69. Can't be doing that. That's why you're below that teeny line. Here we are right here at that breaking action line that we're talking about, MMTs, new and rollies, is that when they're selling this side of the print down, that's sliding that bid down, which takes this number down, which makes this number fall. When this number falls in value, you get the reversal red bar. On this closing bar, MMTs, it's not closed. It has to close above this bar right here. Here's your number, 257.98, and you're 90 by 258.17. Look at that, 27 cents, 19 cents wide. So this deciphers all of that emotion between the public. If they're buying this side of the print, then they're chasing it. If they sell this side of the print, this ratio is going to fall in value. New MMT and rollies, and so but look at here. You're above the half bar. Half bar is 98 pennies down here. Okay. Right here, 257.98. It calculates it for you. But you must stay up toward 100 here. Because if you don't, you can see here, bam, but it's not closed yet, MMTs. And it's still at the high level toward 100. And look at here. We got to break up toward that 1.7. Yep, that means they got to buy this side of the print. When they buy this side of the public print, MMT, your winner will keep going. If they're not, it will weaken up in here, but you can see how they're coming right back in. Triple diamond alert. All right, Will, do you see it?
Yes, sir.
All right. Is it okay that you're live with this trade right now? Do I have your consent?
Yeah.
All right. Thank you. It's your first day being here. Okay. Right? And yes, you signed up for the free 5-day trial, and it's 11:06. We still have a little less than 2 hours of the market open. And what have you learned today compared? And you've been in the day trading game, right?
Yes, sir.
Well, do you see this quite different than that game?
No. This is like having a license to print money.
That's right. And there isn't anything wrong with that, is there?
Yeah. Because here, all the risks, pretty much everything is calculated.
Well, you are, yeah. Day traders are working on the emotion that you're making a market in between.
Yeah.
And if you understand how the day traders, whether they're institutional hedge fund managers, it doesn't matter. Doesn't matter what level, but you're able to monitor their emotion right here, aren't you?
Yes.
If this weakens, and remember how I talked about a continuation 3-minute bar? You're getting it, but notice that the price is diminishing right in here.
Yes.
It's not like it, okay, it's getting a little, now let's see if we break it. See, you're right at 95. If you go below 95, you break down in the teeny line. Watch. Here it is.
Okay.
This will have to go down toward 1.60 to come all the way down 2 more teenies. Okay? So let's see what happens right here at that teeny line. Now you got to go below 95. If it doesn't, it's still strong. The public doesn't want to part with their ownership right now in Netflix. If they do want to depart ownership, when you go below 95, you go break down to this teeny line. This has to go down to 1.60 in order for you to go down 2 teenies. All right, so this is what you would be doing in your enrollee part. For the first 30 days, you're going to be actually paper trading with the system to know how it operates. Once you're cleared, you're going to go into what we call the SMF MMT division. And the SMF MMT division is the trading division. That's the market maker division. That's why it's called MMT, market maker.
Okay.
And so as you witness the public transaction and their behavior, this is quite comfortable compared to, because the people, when they're buying something, they're chasing the top of the move up here to that teeny line, and it's getting a little weak right here. You can see that at this teeny line. So when you know, okay, so you're right up there, and let's say you're in the whole move, you would be selling half of your position here, Will.
Okay.
Because you're dangerously close to breaking that 95 level, whether you do or not. So you'll take half of the money off here, and if you start to close below the bar, it would just simply exit the rest of your position because it would net itself out in the actual trade.
Okay.
So you're never focused on money. You're never focused on anything except what's going on between the buyer and the seller, so that you know how to make a market between them. And the reason why you're selling half, Will, right now, is this a live trade here, Will?
Yes.
It is. And do you feel better by actually working through a trade with someone versus somebody selling you a 7-day CD?
Absolutely.
And what do you find more empowering? The market maker school, or your day trading schools, or your other kinds of institutions, or whatever they may have out there?
Market maker school all the way.
Right. Well, do you see how we broke below 95 here, Will, and why we broke that teeny price action line? To this blue line is a public indicator, Will.
Is that
it's a
week moving average?
No, it's just a minute period moving average.
Okay.
And a lot of the public looks at it, and it's a public technical analysis model. We don't use that. Our model is a market maker model, as you can see, but it tells us that they make certain decisions here, Will. And if this goes below, down toward 85, you're going to blow right through that, and you're going to come down. But on the other hand, you're back above 95, and you're back above that teeny line, right, Will?
Okay.
See it?
Yes.
Take a look. See? So you can see how you can trombone that decision making that's going on between them buyers and sellers up there, right?
Yeah, so it's like you have room to make decisions. Also, you're not flying out in the dark.
That's exactly right, Will. And you're breaking right back up to that teeny price action line, because that went back toward 98 and that went back up there, so that was slide the bid. Notice that the body never closed below that price teeny line. Each line is 38 pennies between the public.
Okay.
You hear me?
Yes.
So here we go. Let's see what happens, Will. It turned around, and we can see right there within the price action line, with that current reading needs to be at 100, and that needs to be breaking the high there in order to have another explosive breakout, right?
Yes.
All right, well, I'm glad you're here, sir. This is all about, now you've got a 12-minute topping consolidation pattern, and what will happen is the next slide, the bid. When you slide the bid on the second bar, you want that bar to be like this green bar in size. You want it to be a teeny. You want this, so when the second bar goes down, you'd like to see it at least a teeny line, because then that's where the weakness starts to build and panic selling would happen, and that's how you get this side to come back down. And we'll do that in the next live trading video. New enrollees, SMF MMTs,